Okay. Good afternoon, everyone. This is a webinar on the oil and gas industries, and this is the second series of webinar on the industry specific program. The committee called Member in Industry and Business. Basically, it's for the largest committee of the institute because 260,000 members belong to these particular industries. As of now, we have the 400,000 4 lakh members, and 60% belong to these industries. And when we talk about industries participation, I think in the institute is very less. Out of the 32,000 members belong to the from the member in practice community, and we always be aspiring that how we can have the maximum participation from industry people, and that's why we wanted to have a member specific program, industry specific program, and the institute has since long continuing a legacy that to update our members industry specific program so that member can attend and make the questions. Though our primary focus is placement for the chartered accountant, campus placement is the one of the activity which we regularly do in the institute, and the placement for the experienced chartered accountant, placement in the overseas market. This is the focus which we are currently doing it, and have the appreciation award. Now we're going to have a 40 under 40 awards, which we started 2 years before. This is the third series going to be the under 44 under 40, which is going to be on 30th November. Application are already open. If you are industry leaders, industry members, under the age of the 40, doing good, or if you know any person, those under 40 are making an impact in the industry, please refer their name for the award under 40 and 40. Coming to this oil and gas industries, this is a one of the prominent area in the sector, oil and gas industries. Hardly people are aware of it, and their demands are continuing rising it in oil and gas sectors, and a lot of discoveries are being continuing happening. And we have the expert panel, Ashish and Vineet. Both are the from industries, and will take through the entire details how the industry is functioning in oil and gas sectors. Uh, Ashish will talk to you about more in detail about the auditing part of it, because he is a senior chief audit officer in Niara Energy, having a more than 25 years of experience in assurance, compliance, governance, risk, and other. Before that, he worked in the Shell India also, and this currently Niara Energy is, everyone knows that the second India's second largest single crude oil refinery, having a 6,500 retail outlets, and he's having a vast experience in this particular area. Feel free to ask any questions, whether it's related to the accounting, auditing, or operational also, because now the chartered accountant is not restricted themselves into the accounting, auditing, or CFO functions. People are becoming a businessman, a startup, and a lot of new things are happening in this area. New technology and new areas are emerging. Please, ask free to that any question to Ashish. And second panelist, which we have the Beneath Kishore. Again, same kind of experience, more than 20, year of experience he's possessed. He's working in the Shell Global, and currently in the M&A team, where he's having the vast experience about the how the gas and oil sector is working, how the world is operating, what they are thinking, how the valuation is being created, how the people are looking more and more area of the in this oil and gas. So these are the area of the we need to. So please feel free to ask any questions. The first it's going to be a presentation from Assis and then Vinny, 20 minutes. Then we have the coordinator, CA Arusi Gupta from Delhi. She will have a coordination part, and we'll go through the various questions going to be asked on your behalf. And even if you have any questions, please ask the question, and that Arusi will surely will take through the Asis and Vineet, so that your all the query will be resolved. So with this, I present before you Asis and Vineet. Now, looking forward to have a good session, and now handing over the Asis. So over to Asis.
So, thank you, Dheeraj for your very kind introduction and for having me here. And it's really a privilege to, share the views that I carry with me. And let's keep this as an interactive session. So, though I'd like to cover a bit about the oil and gas sector, but I think it's important to have the discussion as an ongoing one. So, let me start by sharing my screen, and then I can run through the slides. Yeah. Just give me a moment, please. So I hope my screen is visible to all.
Yeah, visual.
All right, wonderful. So, the oil and gas sector, as as we all know, is perhaps one of the largest sectors that has been around, and as a consequence, the aspect of assurance becomes a very significant aspect when we talk about the sector. And being chartered accountants and professionals coming from the point of view of providing that element of governance and overall assurance to the society and to the economy. It's very important, therefore, to for people from this profession to understand the sector in a much more detailed manner, so that there can be many more sort of opportunities which are available can be addressed, and at the same time there can be a more in-depth and more more uh, aware industry in India when it comes to professionals serving the oil and gas sector. So that is the main objective for me being here. Now, it is a very vast topic, and it is going to take at least 2 days to get into every aspect of the oil and gas sector. So I would like to keep it at a high level. But just to give an overview, there are three main aspects or three main, I would say, subsectors within the oil and gas sector. The first and the most important one is the exploration and production, which is usually called the upstream sector. And in this sector, or perhaps in this particular scope of activities, you find companies which are more in the business of exploration of various reservoirs of oil and gas globally. And then once they are able to find successful reservoir which is commercially available and can be explored commercially, then they actually go and bring that into production, and it is almost 5 to 10 years of work, which then helps to bring the production on stream. So this is the most, I would say, the most crucial part of the oil and gas sector, and at the same time, it is the more the it requires the maximum amount of capital, and at the same time carries the maximum amount of risk. The other element of the oil and gas sector, which involves refining of the crude or the petroleum that comes out of the exploration, is called the refining sector, and it's called downstream. So this basically involves refining the crude oil into various products, which then can be utilized either in transportation or in industry. And depending upon the requirement and then the regulatory aspects, the products are then refined based on the blending norms in the country. This again is a very expensive sector, and if you look at India, India is in fact the fourth largest refining capacity in the world. So it is again by itself a big sector, and has its own sets of challenges and complexities. And then the third element of the oil and gas sector, if you like, is the marketing and distribution. And the reason why it is usually considered as a third arm of the oil and gas sector is because it by itself is such a huge piece to solve and to add value. So this basically involves distribution of the hydrocarbon products from one part of the world to the other, and that is by means of vessels and pipelines and so on and so forth. And then there is an element of the connecting the last mile, so which means distribution channels within the country and then within the state and within the region. And that involves a lot of infrastructure and a lot of planning by itself. So these are the three key sort of value streams or key parts of the oil and gas sector. Now, just to give a global perspective about this sector before we move on, uh, the global production of crude oil is roughly around 4.5 billion tons, and US is the largest producer, followed by Saudi Arabia and Russia. These three countries alone contribute close to 40% of the global oil production. And then you have OPEC, which I'm sure most of you all must have heard. So the OPEC Plus is the largest, most influencing body in the sector, which controls again 60% of the global oil production. So it has a lot of influence and carries a lot of geopolitical sort of impact in terms of the decision that it takes on the production and the pricing of the hydrocarbons in the world. Now, conventionally, we have seen that the onshore and offshore oil and gas blocks were the primary source of feeding or exploiting the hydrocarbon reserves. But since last 1 decade, especially US has been very successful in bringing out other forms of production, mainly through shell technology. So they basically convert uh, there's a technology called fracturing. So they use that technology to generate hydrocarbons out of those gas reserves, and that is something which is now expanding globally. So what it's doing is that it is bringing another third dimension of production of oil and gas uh, uh, commodities in the world, and that actually is then changing the dynamics in terms of the availability of these reserves, and then the whole dynamics in terms of pricing and supply chain. Now, looking at the consumption side, uh, the largest consumers of the hydrocarbons are in Asia. So you have China and India, which are the largest consumers of the petroleum products. And along with that, you have a huge dependency of imports, which these countries have, because these are one of the largest economies in the world, and they do not have domestic production. So therefore, you see that as a commodity, the hydrocarbon is one commodity that moves across the globe, and that is why you find so much of dependency in terms of the supply sources, and at the same time the dependency on the pricing of these products, which impacts the economic activities or the economic objectives of every country. So the idea is to basically give a very broad overview of what this sector is all about and how one can really approach in terms of understanding of this sector. Now, the last element that I'd like to touch here is the LNG. Now, so gas is distributed through large LNG vessels globally, because otherwise it is not possible to install pipelines for transportation of gas. So this has opened up a completely new dimension in the hydrocarbon sector in terms of gas availability and in gas consumption. Now, again, US is one of the largest producers of and the player in LNG, along with Australia as well as Qatar. So as the LNG infrastructure develops further on, we will see that the consumption of gas and availability of gas improving and coming, closer to sort of supporting infrastructure investments and development in developing countries as well as countries where there is a huge sensitivity in terms of pollution and environment norms. So gas as a source of hydrocarbon is, I think, one of the future fuels in the hydrocarbon basket, which obviously will have continued improvements in technology and as a consequence, continued investment opportunities as well. So with that, let me come into the context of India. Now, India being a large country, has presence in almost all the value chain of hydrocarbon. And if you look at this slide, I have again tried to bring the element of upstream and midstream and downstream here. So if you see the upstream part of India, you have ONGC and Oil India, who are the major players in the upstream sector. And then in the private sector, you have Reliance Industries, which entered into exploration a decade back. And then you have Gain India, which is the other major player. So though the fact remains that the production of India in terms of petroleum or the crude is just 29 million tons a year as compared to almost 240 million tons of consumption. So India has to import almost 86-87% of its crude requirements, but at the same time, these entities and these companies do provide us with the security or the energy security, if you like. And to that extent, they definitely are a very important part of our hydrocarbon sector. Uh, in terms of the midstream LNG, we discussed. So GAIL is one of the biggest player in this area. So they are the national company, and their main objective is to provide distribution facilities for gas from the point of source, which in case of LNG would be the LNG terminals, and in the case of the fields, oil and gas field, from the source of production, and they try to distribute gas throughout the country. And that by itself is, as I mentioned, a separate sector. And along with that, then you have city gas distribution companies. You have companies which are supporting the import of LNG. So there is a growing sort of a sector in the distribution of gas. And apart from that, the traditional distribution networks for the liquid hydrocarbons remains. So you have all the major companies in the in the government sector as well as private sector now setting up retail outlets for the last mile distribution of petrol and diesel. And then along with that, most of these companies also support distribution of petroleum products to the industry. And then the third element is the downstream. So in India, you have a lot of presence of the public sector companies. And as I mentioned, together, our capacity for refining is almost 240 million tons per annum. And this is expected to reach almost 300 million tons per annum by 2030. So there is going to be a huge investment coming in the expansion of downstream capacity in India. And at the same time, you would find that there is going to be huge foreign investments coming in the sector. So both the public sector in India as well as the foreign capital will invest a lot in developing the capacity, primarily because of the fact that India is growing and there is a huge dependency, and in the foreseeable future, the dependency is going to continue on the hydrocarbon sector. So, on an average, 3 to 4% is the growth in the consumption of hydrocarbons, and that is going to support the expansion of capacities and therefore the investment in this sector. So that's the overall landscape for the hydrocarbon presence in India. And then with that, I'll come straight away to the point of the discussion that we started off with. That is, what exactly uh, assurance mean in an oil and gas sector. So I can start by giving lowdowns with the specific sectors, because the what assurance means in an upstream sector would be very different with the key objectives of assurance in the downstream and midstream sector. So without understanding in detail about each about the key drivers and key dynamics of each subsectors, it is not possible for me to talk about the assurance objectives. So therefore, let's spend some time to understand the key elements which are very relevant in the management and operations of the upstream sector. So this slide helps to understand the value chain in the upstream sector. So as you know, in India there are a couple of oil and gas blocks which then gets auctioned. Earlier we had something called NEL, which has been discontinued, and now India has adopted open acreage, which means that prospective bidders can evaluate and then come to the government with a proposal to lease those oil and gas acreages, and then they can get into further discussions for getting into these contracts. So basically, the start of the upstream activity comes with the selection of these prospective acreages. And in India, you have both offshore and onshore acreages available for foreign companies and Indian companies to explore. Though, of course, Indian continent does not have at this point in time the kind of reserves that one would have in, for instance, Middle East, or for that matter, in South America. But at the same time, it is important for India as a sovereign nation to explore and realize its full potential of hydrocarbon. So, with that objective, it is again important for our government to attract as much capital as it can in the exploration of its hydrocarbon reserves. So the first step, or the first milestone, is to get into the selection of the right acreages. And then once that is done, then the prospective exploration companies then uh, adopt different technologies and adopt their know-how to start exploring these fields. And these fields are really massive. They are into thousands of kilometers. And it is like easier perhaps to do exploration of Mars, but it is very, very challenging to even come with a probabilistic sort of a simulation of where there could be a possibility of finding hydrocarbon reserves in those vast, acreages. So it is a very tough job. It's very technology oriented, so therefore it requires heavy investments in the latest technology. It involves significant statistical capabilities. So I would say that major foreign companies and major global technology providers have that know-how and capabilities. In India, this is still because of the fact that we do not have a well-developed upstream sector. We unfortunately do not have that level of technology. So usually you would find Indian companies partnering with global majors so that they can then utilize or take benefit of those tools and technology to support the pursuit of finding the reserves. Now, once a discovery is made, the job has just started. There is like, it requires to be first determined whether it is a commercial discovery, in the sense that the investment that will go in developing those fields, whether they would be commercially viable. And I can say that there are almost 20 to 30% of the discoveries in the world where we know that there are hydrocarbons sitting, but then they are not commercially viable. So therefore, there is no possibility to bring those hydrocarbons up. So therefore, the phase of evaluation of the commercial viability becomes very challenging, and perhaps is the most important phase in determining the success of the further upstream activities. So this requires the development of, coming up with a field development plan, then one has to go to the government to get that approved, and then there are certain contracts that get uh, signed between the sovereign dispensation and the exploration company in terms of commitments about the profit sharing, about the production, about the development of those fields. And based on the commercial agreement which they reach, they enter into the final contract, which then helps those companies to start uh, drilling the wells. So basically, that again itself is a field development strategy or plan itself is a very complex area, so I will not cover that. But just so that everybody understands, the construction that involves construction of processing platforms, wellhead platforms, and then making sure that those wells which are drilled to extract the oil and gas reserves have all the sort of safety and environment and extraction sort of compliance, so that then it is sustainable, and then it results in success in terms of flow rate. So that's how the production starts. It's easier to drill and produce from onshore, but it is very challenging and very difficult to produce from offshore, that is in the sea. And you must have seen ONGC and other companies actually doing this in the middle of the sea. Uh, and it is one of the most dangerous activities to be doing in the world. But at the end of the day, given the fact that it is a very critical activity to make sure that we get the energy, and then we are able to develop the economies and then support the society, it is therefore becomes incumbent. But at the same time, there is a lot of focus given on safe operations, on continuity, on environment sustainability, and so forth. But at this point in time, most of the oil and gas fields which are into production are actually sort of having significant focus from the local governments as well as from their long-term buyers to make sure that there is an assured supply of the energy sources. And then usually, it depends upon the reservoir and then the way in which the hydrocarbon is extracted. But usually, the life of these fields could be anywhere from 15 to 25 years. So once the hydrocarbon is extracted, it is very important then to abandon those fields in the most safest way. So there are regulations for each country, which then has to be followed. So there again, it's a major activity, and it's required that the infrastructure facilities that were developed are removed, and then the wells are plugged, and the abandonment is success, so that it doesn't create any further impact on the ecology. So this is the whole value stream of an upstream sector. And as I mentioned, this can itself take 2 days to understand. But this forms the baseline understanding to sort of take forward the conversation on assurance objectives in the upstream sector. But given the fact that the sector itself is so wide and has so much of complexities and challenges, it throws so much of opportunities and uh, expectations in providing assurance in almost every aspect of the upstream operations. What you see now is just a few sort of listing of the core assurance expectations in the sector. So the first and foremost is the technical assessment of reserves. Now, as you can see, the biggest asset that any oil and gas company can carry is the reserves that it holds, because that is the basis for which the company gets valued. So today, if ONGC has X amount of reserves, that gets converted into the amount of market cap it will deserve in the capital markets, and so on and so forth. So therefore, in terms of assurance, it's very important that there are proper governance standards, and there are proper there's a proper assurance given by independent experts on whether the in place reserves which is being declared by these organizations are correctly calculated. So that is one of the most important assurance objectives or expectations in the upstream sector. The other piece which we discussed in detail is in the project phase, because billions of dollars are invested in the development of the facilities for upstream sector. So here again, if I just to give a heads up, almost 500 to 600 billion dollar on a very rough estimate basis gets spent each year in the development of the upstream infrastructure facilities. So the whole gambit of projects controls and then monitoring of those projects and then monitoring the spend and then making sure that those projects are ultimately delivering the core objective. So there again is a huge piece where the assurance expectation is needed. Then coming to the performance of the contracts with the governments and with the other stakeholders. Now, these are very complicated contracts in terms of sharing of profits, sharing of costs, pricing of the products, calculations of production. So these again require each and every element in this requires assurance by both parties, by the producer of these hydrocarbons, by the government, by the joint venture partners. So here again, there is a huge scope for providing assurance. And then, on an overall basis, I would say that oil and gas is a heavily regulated sector. You have MOPNG and then you have PNGRB that has its own set of regulations where every player has to follow those guidelines. And safe performance in the sector. So there again, there is a huge scope for assuring compliance in relation to the performance of those core deliverables. And contracting activities is major area. As I mentioned, it's one of the largest capital uh, 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 intensive sector. So therefore, the commercial contracts, how they're awarded and how they're managed, again becomes a very important piece. Uh, uh, each contract could be 100 to 200 million dollar contract, and therefore, there's a high risk in terms of those contract awards and those contract management. So this again is a very important piece in relation to assurance. So I'm just giving a broad heads up, but these are the major areas where I think uh, every auditor or every assurance provider, once they understand the sector more, can play a very big role in making sure that the quality of assurance can be improved, or for that matter, we can create a bigger pool of assurance services for our people, for our folks in practice, which then can be served not only in India, but then this is a universal or a global sector. So once we have our chartered accountants or other assurance providers, get expertise or to get more in-depth understanding or subject matter expertise. The it has a huge potential, and one can tap into that sector globally. So it's really important to understand and then try to develop certain competencies in either of these areas, so that it's something that I think India uh, and especially the assurance uh, sort of providers in India have ignored the oil and gas sector to a very large extent. So there is a huge opportunity out there. Now, in terms of risk in the upstream sector, a large part of it we've already covered, so I'm not going to repeat. But crude price is one of the biggest risk to the sector, and I think it is one of the most volatile commodity globally. Um, and this is the single most element that gives a lot of uncertainty to the sector. Now, just imagine an upstream company which has to make investments of billions of dollars, uh, doesn't even have any visibility on what will be the price at a time when the facility, if they are able to find commercial production feasible, what is the realization that they will get. So that is the element of uncertainty that one has to deal with. Uh, So that's, I think, one of the biggest challenges why you find that there is an entry barrier. A, because of the volatility in the sector, and B, it's a very capital intensive sector. And so you can only enter in the sector if you really have the ability to bring sustainable capital and keep, bringing the capital to develop the upstream business, and then keep investing into those assets, so that you are expanding the life, and then you are running those facilities in the most safest manner. So it is a highly capital intensive sector. So because of that, it is there is a huge entry barrier, and at the same time, it is, I would say, one of the most risk um, impacted sectors globally. The third piece where the risk comes from is the regulations from the local authorities or the local government. Now, it is a highly regulated sector, so every country will have its own sets of regulations in terms of every aspect of the operations, and especially where the sector is not very well developed, or the economy itself is developing, you would find that there are a lot of policy changes which happens midway. Now, when there is a serious capital which is coming in, or a long-term capital investment which happens, and if you find that in midway, important policy decisions are changed in terms of tax, or in terms of the whole model of operations, it really results in huge impact, and it really results in the possibility of having long-term view on that particular country. So therefore, that is one of the major areas of risk. And the other risk, obviously, is the environment impact. Now, I would not say that the impact of hydrocarbon on environment is substantially higher compared to any other industry. So I wouldn't try to highlight that as a single most important risk factor. But at the same time, yes, it does have an impact on environment, and therefore there is an element where there has to be a long-term view on the environment management and how those risks can be mitigated through safe operations, and through sort of using the best technology that is available. So this is the landscape as far as the upstream sector goes in relation to risk. Uh, I will not go into specific elements, but as I mentioned, there are many elements uh, in relation to each and every uh, s- uh, uh, aspect of activity of the upstream sector. So in relation to production sharing contract, there are many, many nuances, uh, and there are many important commercial arrangements within that contract, which requires verifications and assurance by the government, by the joint venture partners, by the producer, or by the operator himself. So that's where it becomes really important to understand the model of these either production sharing contracts or revenue sharing contracts, and then really understand how and where the challenges really lie, and what assurance providers can really do in order to add value to the business and to the organizations. So I would keep it at that, but I'll be happy to take any questions. Likewise, in relation to joint operating agreements, uh, usually you would find that any upstream activity cannot be done independently. So there are always joint partnerships. So, for instance, in India, you would have ONGC partnering with BP, or Shell, or ExxonMobil for development of their fields. Likewise, Reliance or Kane India partnering with another companies because of the huge risks and because of the capital intensive nature. Now, therefore, there would be these joint venture contracts, and these joint operating contracts are again very significant part of the operations, and they again carry every element of operations. Now, here again, there is a huge opportunity to provide assurance on the compliance of these joint operating agreements, on the responsibilities or the obligations of the operator, on the rights as well as the cost and revenue sharing responsibilities of the non-operators or the joint partners. And I would find that, and I can say that globally, this is a huge area for assurance professionals to add value. In India, unfortunately, because of the fact that we do not have a very well developed sector, consequently, we have not been able to find too many professionals who are able to provide significant support or services in the assurance of these areas. But as I mentioned, the opportunities are not just restricted to India. There are global opportunities available, and therefore it becomes very relevant to sort of get a grip and understand these elements of the upstream oil and gas sector. Now, these are the important processes. Again, I will not get into specific details, uh, but it becomes very relevant if one is interested to serve this sector and to understand how the operations are being run, because at the end of the day, the joint operating agreements are not incorporated entities. So every partner has their own books of accounts, and then they run their own cash flows. So there are very typical sector-specific processes which you will not find in any other industry. So these are very relevant only for the upstream sector of oil and gas companies. So it becomes really important to understand these concepts and understand these processes. And each of these process offers huge opportunity to not just provide assurance, but also to provide technology support, to also provide manpower support in relation to execution of transactions. So I would say that each and every element here, in whether it is in terms of how the work programs are prepared, or how the expenditures are recorded, how the cash flow is recorded and then called out for, uh, how the final statements are prepared, which are to be submitted to the regulator. Each and every element is very peculiar for the sector and very important. Uh, we already discussed, but as I mentioned earlier, contract award and management is a very important area for providing assurance, both from the pre-award side in terms of the bid evaluation stage, to the contracting strategy, to looking at the scope and milestones which are put in the contract, then to the contract post-award, which includes interventions and dispute management. It includes contract closure, recoveries, and these are multi-million dollar contracts. These are not like some on tap material contracts. So each contract usually runs into hundreds of millions of dollars, and there is a huge requirement for professionals from audit and assurance background to understand these contracts and then to review how they were delivered. And there is a huge potential to save cost, huge potential to bring efficiency, and usually, people who then can understand the scope of these activities which are awarded as part of the contract, and then how that actually fits into the upstream activities. It really is something that chartered accountants, or for that matter any assurance provider, can look at in terms of their career opportunities. So that's what we covered on the upstream side. Now, as I mentioned, it's a huge sector and really not possible to capture everything in 45 minutes. So I will very quickly now cover the last mile, which is basically your sales and distribution piece, because so we looked at the upstream, and then I would like to cover the last mile. There is a huge stream in between in terms of refining, so which means the crude coming into the refining process itself, and then the production of different products as per the specifications. Now, it's a very technical area, and it mainly requires people with a lot of understanding of or expertise of the refining activity. So that's why I have not captured it. But at the same time, I can say that it's a question of understanding. And as one can get more and more understanding of the refining process, it's more and more possible to provide assurance, or to at least support assurance in each of those areas. Uh, but I think the last mile, or the distribution, is something which is very easy, and something that can definitely be added easily into the assurance objectives of most of the chartered accountants or assurance providers. So that's why it's been covered over here. So you would find that usually in the distribution piece, there would be first a demand planning. So any PSU, or for that matter, any oil and gas company has to distribute its products, both domestic markets as well as exports. So they will have to plan how and what volumes they will have to distribute in which region, and how they would be able to do that. So therefore, they will have to develop infrastructure facilities such as depots and storage locations, and then they will have to have transportation capabilities, which would be by vessels or by tank trucks or by rail racks. And we're talking of millions of tons getting transported, and therefore it becomes really important to build and plan those infrastructure facilities. And then the last mile is the retail outlets in case of liquid hydrocarbons. So you need to have a proper planning in terms of setting up of those retail outlets, and then how, in which locations those outlets would be set. There are that by itself is entire focused area for review in terms of how those operations are managed and how the whole retail network is planned. And then we discussed about the gas. So therefore, the pipeline and distribution of gas becomes again an important piece in terms of distribution. So what is the grid plan? What is the performance in terms of gas flow? How much is the distribution loss? How the pipeline network is supporting the local demand, and so on and so forth. So each and every area within this piece becomes very important in terms of understanding and performance assessment. So I will just very quickly cover some of the key touch points at the retail end, so that it is easy for by and large people to understand how relevant each piece is in terms of providing the overall assurance. So as you can see, as you know, the crude prices are volatile, and therefore the price of oil and gas is very volatile. So petrol, diesel, all other products, the price setting happens almost on a daily basis. So imagine if you have, say, thousands of outlets pan India, and every day you will have to change your prices to make sure that you are, either not making any losses, or you are not overcharging your customers. So having that overall system in place to make sure that one is able to make the price communications to all the outlets at the same time, and then making sure that those outlets have the ability to change the price at the given cutoff time becomes very important. So this is, I think, one of the biggest challenges, and at the same time, one of the biggest areas in terms of assurance for the retail outlet operations. Likewise, the other most important thing is terms of the stock assurance. At the end of the day, this is the last mile, and every retail outlet will have independent management of its operations. Uh, Although there could be a large part of retail outlets which could be managed by the companies which are called as CODO, that is company owned, company operated, COCO, sorry. But at the same time, it is very difficult to make sure that the inventory which are lying in these outlets are managed operationally, as well as in terms of control frameworks are in place. So from that point of view, I think there are many checkpoints which are required, and at the same time, it has to be technologically driven. So the stock assurance objectives are very important. Again, I'm not getting into individual areas, but there are different techniques or different ways to go and verify the stock, and then confirm whether one can, or to check if one can get any significant variations in the stock, then that's a red flag. Likewise, in terms of density, because we all have discussed about how easy it is to, adulterate the quality of our diesel or petrol, and therefore it becomes very important to make sure that there is sanctity in terms of the quality assurance. And again, this becomes a very important element in terms of verification and assurance. So here again, the auditors and the assurance providers have to play a very big role in testing the quality of the products which are dispensed from the outlets. And again, if there are some gaps or if there are certain quality deviations, then there has to be a proper redressal mechanism. Uh, Dispensing unit becomes the most important part of the delivery mechanism. And again, there could be many challenges in managing these dispensing units. So it is very important then to check whether the dispensing units are operated uh, with integrity, and there are no unauthorized excess or no unauthorized modifications into the dispensing unit. So this is again something which is very important. And from an assurance point of view, I would say that most of the time it is the biggest challenge to confirm, but again, it's a very important element. And then the safety and integrity, so and compliance. So there are sector regulations, and then at the same time, these outlets have the biggest hazard of fire. So it is very important that they are managed with utmost compliance in terms of the regulatory requirements, and at the same time, all the internal policies. So from an assurance standpoint, again, it becomes very important that all the norms and standards specified are being followed without any exceptions. So that's by and large covers the overall objectives of assurance in the upstream sector and the last mile of the downstream sector. And as I mentioned, the deliverables of assurance are the same maybe in as it is in all the other sectors. But given the fact that this sector is so huge uh, and has one of the highest incidence of risk, the role of assurance providers becomes very big, and therefore the scope and the value in terms of providing that assurance therefore becomes very significant and can be really very relevant for the organization. So with that, I end my presentation and happy to take any questions.
Uh, Thank you so much, sir, for your valuable insights. And we have some questions with us. First question is, please explain the windfall tax.
Okay, fine. So I think this is a windfall. I mean, it's basically there is a concept called supernormal profit. So, as I mentioned, oil and gas is a very regulated sector, and not just in India, but globally. Now, what happens is that the host government really checks whether the participants of that in the oil and gas sector in that country are not taking supernormal profits, because crude can move from say $40 a barrel to maybe $150 a barrel, but you will not be change. I mean, the cost will not change significantly. So whenever the government finds that the crude prices are going up beyond a threshold, they do not want the certain set of companies take supernormal profit. So they keep adjusting that tax so that they are able to then a get a share of that profit, supernormal profit, and at the same time, in a way, regulate the prices, or in a way, make sure that they are not taking the prices way above when so by subsidizing those prices when it goes beyond the threshold. So that's the overall concept of windfall taxes. I can provide more details if need, but that's the whole idea.
Okay, sir. So the next question is, how can companies ensure the safety and integrity of their oil and gas infrastructure in India?
So there are two elements of it. One is the safety of people and operations, and other is the integrity in terms of delivering objectives of those infrastructure facilities. Yeah. So I would say that one is obviously not negotiable. It is paramount. This is the most uh, you know I mean, if you're operating at 500 meters below, in offshore blocks, in offshore fields, you cannot sustain those operations unless and until you operate them with utmost, utmost safe safety objectives. So therefore, there are there are regulations surrounding that. So you have OISD, which is a arm of MOPNG, which provides the guidelines to every company in terms of safe operations, and then every company has their own set of standards and guidelines for safe operations to make sure that they are managing their operations safely, and at the same time, the facilities and infrastructure which they developed continue to have integrity to achieve the objectives.
Okay, sir. Next question is, how can companies effectively manage cybersecurity risks in the Indian oil and gas sector?
So I mean, cybersecurity is a universal risk, but it becomes more complicated and challenging when it comes to oil and gas because of the fact that it's the backbone of the economy. So if you have, for instance, a cyber attack which results into unplanned shutdown of any oil and gas production facility, or for that matter, the refining facility, it directly impacts the economy. You really cannot produce in advance. So therefore, it will impact. So the cascading impact will be much more. And then there is a heavy sort of a dependency on OEMs to provide various systems and various technologies. So therefore, the oil and gas sector is more prone to cyber attacks because you cannot be just dependent on your in-house cybersecurity frameworks. You are also dependent upon the cybersecurity protocols and frameworks provided by the OEMs. So therefore, so the only way you can actually deal with it is to keep improving it.
Okay, sir. Sir, how can companies ensure the reliability and efficiency of their supply chains in the Indian oil and gas sector?
So now, I mean, so it's a highly geopolitical thing, right? I mean, today now you have Sudan and a couple of other countries which are blocking the route where traditionally, we carry our crude and supply our products. So supply chain is the biggest challenge and risk in case of oil and gas. And as I mentioned, uh, almost, uh, I mean, the entire oil and gas production and consumption throughout the world is there is a huge disparity. So therefore, the consuming countries are not producing, and producing countries are not big economies. So therefore, they have to export. So therefore, there's a huge element of supply chain involved in hydrocarbons, and it is therefore prone to a lot of challenges and uncertainty. So therefore, the answer is that uh, there is no way to secure the supply chain, but at the same time, I think the smart supply chain strategy would be to have alternate supply chain options available so that you can have better ability to manage it in case you face challenges with your traditional sources.
Okay, sir. So there is a last question. What are the emerging trends in assurance and quality control in the Indian oil and gas sector?
So as I mentioned, in India, the oil and gas sector itself is not very well developed, and consequently, the whole assurance in the sector is not very well developed. And I really appreciate, this effort and this event organized by ICAI to create more awareness, because I would say that there is a huge requirement to improve the quality of assurance in India in the oil and gas sector, more from the point of view of awareness, and then also to look at it from a point of view of potential, not just for India, but not just for serving India, but then to serve, to provide global solutions. So from that point of view, it is very important that we bring our professionals and especially our fellow chartered accountants with more and more understanding of this sector.
Okay, sir. Thank you so much, sir. This is the end of the questions.
Thank you.
We have our next speaker with us, CA Vinod Kishore, sir, and he's going to introduce us about oil and gas retail. Vineet sir is currently working with Shell as Senior Valuation Advisor in Shell Global M&A team. He's a chartered accountant with 22 years of post-qualification experience. Last 15 years in Shell, he has done different roles like CFO of Shell India, retail business, global taxation and mergers and acquisitions. Prior to joining Shell, he has worked with ArcelorMittal at their corporate office in Luxembourg, General Electric in India and China, E&Y and Deloitte, gaining experience in manufacturing, financial management, audit, and consulting. So we can have Vineet sir with us.
Yeah. Thanks, Arushi. Am I audible?
Yeah, sure, sir.
Yeah, I think my video has taken a different angle, but probably I'm not able to change it, but I'll continue. Let me share my screen. If the technical team could give me the rights. Okay. Let me know once it is visible. So, thanks, Ashish. I think you've covered, quite a lot of information, and that also complements my topic. So I would be focusing more on the retail sector. I want to break my presentation into three parts. First is the landscape part, the landscape of oil and gas. Second, focusing on retail and how is it done. Third would be the profitability, or how can we earn money from the retail sector, and what role can finance play, or what role we all can play here. In terms of landscape, the total oil demand or the oil consumption in the world is approximately 100 million barrel per day, which is quite a lot, and 70% of that is coming from fossil fuels. Fossil fuels is the hydrocarbon element into it. As we all know, it cannot continue using the fossil fuel for longer. We have to ensure that fossil fuels comes down to a significant lower level. Now, coming to India, India's consumption of oil is approximately 6 million barrels per day. India is a growing economy. It is expected that India's GDP will grow, and as our GDP will grow, the oil need or the oil consumption of India is still expected to grow. The global oil consumption of 100 million is expected to remain constant or may come down year on year. As the power is shifting towards the east, the Indias of the world or the other countries in the east, and even the growth in African nations would ensure that the demand or the consumption in this area will increase. Europe or the West or the US would mainly be flat, and with adoption of more EVs, their oil consumption is expected to come down. India is already at the third largest consumer of oil. And the good part is we do import quite a lot. We import 85% of our need. But at the same time, we are a big in terms of refining capacity. I think Ashish has covered quite a lot in this area. So what we import is crude. We don't normally import the refined element. So we import crude, and then it is converted into petrol and diesel and multiple other. Let me move on. Yeah, so the three big segments, very high level, upstream. From an Indian point of view, ONGC is the one which would dominate the Indian oil production. Midstream is basically the pipeline, the network of pipeline which is used for transportation of crude and various products. Indian Oil Corporation is has got a huge network of pipeline. Third one is the downstream. Downstream is, again, it has refining part and the marketing part. If I spend a minute, why or where is the oil and gas sector used? We do a lot of production, globally. Oil is produced, and it's a big industry. But where is it ultimately used? So 70% of the production is used for transport sector. 70% ultimately is used for transport. 25% for various industries, and 5% is for miscellaneous. So my focus today is only on the transport sector, the usage of oil. Again, a very high level on imports and exports and Indian production. The chart shows oil imports and the oil production from India. Again, 85% is imported, India is around about 6 to 7 million barrels per day in terms of consumption, and it is expected to grow to 8 to 9. Now, let me focus on mobility. This slide is talking about the Shell Global Mobility. At a Shell Global Mobility, there are about 46,000 retail sites, and Shell at a global level is the #1 mobility player in the world. Our topic is not global. We will be focusing on India. Let me first try and explain some of the elements of a mobility or retail. What we buy, what you and me buy on the petrol pump, like petrol and diesel, is ultimately retail. That is what we are covering today. There are different models that are used in this industry. I'll probably talk about 3 of them, which are the most common one. One is COCO, company owned, company operated. This model basically means the company, which could be Shell, the Indian Oil Company, or so those are the companies which would own the site, which would own the petrol pump, and they would operate the petrol pump. Second is the CODO. CODO is basically company owned, dealer operated, which basically, as the name suggests, company would own the land, company would own or lease the land, company would own the dispensers, the tanks, and the entire landscape of it. The third party or a dealer would come and manage the entire operations. He would sell them at a commission. The third common model is the DODO. DODO is the dealer owned, dealer operated. This model is basically the investment is done by the dealer. He would own the land. He would have his own in terms of specification. The entire setup would be his, and obviously he would carry significant risk also in terms of safety, in terms of petrol, in terms of how the fuel is moved from terminals to the site. So this would demand a higher percentage, higher margin. What do we sell from the site? We sell multiple elements. We sell diesel, which is also called AGO. We sell MoGas, which is called petrol. We sell lubricants. We sell convenience retail. What is convenience retail? If I touch this topic, this is an important area. Fuel or the petrol, diesel has a high volume, lower margin element. Coming to an element of convenience retail. Convenience retail could mean we sell coffees, we sell beverages, and we sell snacks from the. So we have a shop which is called a convenience retail shop. Why do we focus on a shop in a mobility sector, or why do we focus on a shop in a retail pump? Because of sustainability. I think it's again a high volume, low margin one. You have to have an extra element which can bring in more customers. The fuel volume is generally linked to the GDP. As the GDP rises, if your GDP rate is 7 to 8%, your annual fuel volume would also jump by 7 to 8%. But that is at a all over India level. You can, or maybe the petrol pumps can demand or have higher volume by bringing in CR shops. If you have a CR shop which is doing well, you have customers coming in for the CR shop, you can ensure you have a higher volume. Let me touch on lubricants also. One chunk on the petrol pump, I'm sure you all might have seen, is a lubricants one. Sometimes it is called the lubricants bay. Sometimes it is an area where you can change the lubricants right in front of the customer. Customer can see the process. Customer can see the old or the oil which has been removed. Customer can even see the new oil which has been given. So the best part is it is about service. On the pump, it is more about how we service the customer. We want to service the customer and change the entire lube change or the oil change in 20 minutes, including the oil filter change. Maybe offer him a cup of coffee in this period. Second element on the shop is on differentiated fuel, which is the 93 octane or the higher level of petrol and diesel, or which is sometimes called the V-Powers, which is basically a higher or a cleaner version of the fuel. it has a higher price, and it definitely has a higher margin. Let me move on from here. Now, focusing on India business. In India, there are about 90,000 retail petrol pumps in India, and 91% is managed by the national oil companies. Indian Oil Corporation is the number one there. The balance, 9 to 10%, is managed by the private players. Let me focus on some of the specific elements on the site. Now, to ensure you have got fuel at the right time, the site will have tankers, and there are different fuels. You would have to ensure the tankers are filled with the relevant fuels. So you need to have a very strong supply chain management on the on the site. So if your tank is almost 50% done, you have to ensure that you are requesting for the new fuel. This requires your terminals or the refinery to be at a reasonable distance. Although within India, there is a huge pipeline which runs, which can carry fuels, but it is mainly operated by Indian Oil Corporation. So some of the private players don't use them. So they have to ensure that their terminals or their storage elements or their refinery is at a reasonable difference. It is at a reasonable distance, because it is not easy to carry the fuels. If you carry the fuels, it is risky. It has a higher cost. So I'm moving towards profitability and some of the important topics here. How does a petrol pump make money? The first element is a differentiated fuel, because again, you have to earn money. Your higher margin is the one where you are selling the 93 octane or the higher cleaner fuels. Second is the price in terms of pricing. Now, pricing is not something where every pump or every company can decide, because again, in India, 90% of the petrol pumps are owned by national oil companies. So Indian Oil Corporation normally is the leader. Once they decide in terms of pricing, others would generally follow. In India, in terms of regulation, pricing is a free market. So every company can decide on their own pricing. But obviously, you can't, if somebody is selling at 100, you can't sell at 150. If you feel your fuel is cleaner and better, you can maybe sell at 110. Second, in terms of pricing, is at what price you buy. You buy from the refineries. And again, the refining price depends on the crude, depends upon the dollar price. And you sell at the price which is governed by others. So the difference is your margin. To manage that, you have a safety margin or you are earning well, sometimes you have to have back-to-back agreements in terms of buying, or you have to have swap agreements from your buyers. I've touched on convenience retail. It's again a very important element from a profitability point of view. The focus nowadays has really shifted that shop should also give us a good return. It is not only the oil, but shop should also give us a good return. EV charging. EV charging is so India is still picking up on EV. I think the EV sales for India is approximately 2% in this year. 2% of the cars sold this year in terms of four-wheeler is EV. It is still low as compared to some of the European countries, US and China. But with with multiple launches by the car manufacturers in terms of EV, this is expected to pick up. B2B, I think this is a different area where you can sell in bulk to various trucks and various companies which operate on transport. And there are different models available for it. There are, with technology, you can have a card system where, if I take one example, let's say a packer mover company has got 1,000 trucks and they want to fuel in different parts of India. And they have got 1,000 different drivers, or maybe about 2,000 different drivers. So a card can be given to every driver who would come to the site. By that card, it would be identified his driver X. He would be able to fuel up without paying, and the company would directly get the billing. Nowadays, even if the driver or the company wants a loan, there is an instant loan available from that card. Lube Bay. I think I touched this topic earlier. Lube Bay is the area where the lubes can be changed. This is a place where you come, you can request for a complete oil change. And again, there are different categories of lubes, from a synthetic to a normal one. Technology and apps again are really driving in terms of cost. Loyalty programs, or it can be done through phones, it can be done through apps, or nowadays even your face recognition are the ones which would help. You want your customers to come back again. The loyalty programs have been launched by various companies in India, and the focus has been that how would you ensure that you respect the customer, you treat the customer well, give them discounts. Discounts are anyway, as part of the program, are always given. But more importantly is how do you identify customers' preference? If I take one example, a customer is coming to your on your petrol pump once in every 3 days. He has a fixed time when he goes to the office. His tank has a fixed capacity. Generally, his tank is over in every 3 days. And generally, based on his preference or based on his program or based on his card, that he would order a coffee, once he comes there. So as soon as the customer comes, as soon as he shows his card, you can identify the customer and offer him a cup of coffee, instantly. So that's basically understanding the data, and then with the data, what is the customer's preference? If I move on, this is an area where there are a lot of areas from finance which can be touched. The tax, accounting, transactions, controls, and apart from that, there is oil. Ultimately, oil is there on the site. The oil reconciliations, because oil is a very like a variable element, so it can evaporate, it can catch fire, it is risky, and at the same time, oil would expand based on temperature. So if it's a very hot city, oil would also expand. A reconciliation of oils is quite significant. Accounting, again, it is not a simple aspect of just accounting from a company point of view or from a retailer point of view. It also uses how would you ensure a centralized accounting for all your retailers. If a company has got 1,000 sites, how would you ensure you have consistent accounting done at all the sites? Am I audible? I'm getting calls from the institute. Am I audible? Hello?
Yeah, Vineet, you're audible.
Okay, because I'm getting some of the calls. Okay.
No, you're audible.
Okay. Accounting also has element from how does your data or how does your preferences can be tracked. You don't want accounting to be done differently from a site in Chennai versus a site in Delhi, or even from a site in Chennai versus a site in Calgary. You would want the same accounting practices to be followed there. Sometimes you hire third parties who can do accounting for your various sites, and and can produce your results by site, by region, by city, or by different countries. Controls are important. There are various controls from safety standards to how do you manage oils, and there are various checks. I think some of them were also touched upon Ashish. Some of them were touched by Ashish. Yeah, I think I would leave it here, and I would be happy to take any questions. Arushi, can I request if you have some questions?
Sir, thank you so much. We have some questions with us. So the first question is, how can oil and gas retailers improve their profitability and efficiency?
I think I touched this topic, Arushi. So the point is you have to have profit per site. So if a company has got 1,000 sites, it has to ensure that every site is profitable. And there are different levers to play. How do you improve your differentiated fuel? Because your margin on a differentiated fuel would be significantly higher than a normal fuel. How can you ensure you have a higher sale of your higher level of lubricants, which is the synthetic lubricants? And even I think nowadays, in terms of shop, there is a new options available to say, can I have a co-branded products on the shop? You will have snacks, you will have coffee, snacks, but at the same time, can I have a co-branded coolant? Can I have a co-branded water? You can have a Bisleri water also, but if you have a Bisleri water, Bisleri would govern the terms, and you may have a smaller margin. But you can have a same Bisleri water if you have a co-branded agreement with them, which would give you a significant margin.
Okay, sir.
Again, the shops are the petrol pump generally works on a low margin, high volume business. So what can really change is those differentiated fuel, those 93 octanes or the V powers, their higher element of lubricants, and the shop.
Okay, sir. So the next question is, generally we have seen that Shell prices are higher than other competitors for retails. What makes Shell to sustain in business?
So there are a couple of answers to it. One is based on the fuel quality, and what Shell believes that from a retailer point of view, if you are spending 1,000 or if you are spending 100, you should be able to get a higher mileage. It is not based on the quantity or the price. It is based on mileage. That's one. And I think that is the main reason that ultimately there is a higher cost for a higher, in terms of a cleaner fuel. But from a retail point of view, from a consumption point of view, or from a consumer point of view, we don't believe the consumer will have to pay more.
Sir, the next question is, what are the emerging trends in retail formats and customer preferences in the oil and gas sector?
Okay, there are two trends which are coming up, quite a lot. One is the CR shop, which is the convenience retail shop, and which I touched upon. Second is the EV charging one. EV is again at a very nascent stage. It is just picking up, but it has a potential to go up. So EV charging is like a power trading business. You are buying power from the grid or the government, and then you are selling through EV. But the catch here is you have to be profitable based on your utilization ones. So there are different forms of EV, the charging machine, from ultra fast to normal ones. There are generally three of them which are used. Ultra fast is the one which can charge your entire car in about 30-40 minutes. But at the same time, managing a good utilization level becomes difficult because one car can be charged in about 30 minutes only. So EV is a good coming up in terms of trend. Second is, how can you ensure you have a higher profitability from a shop? And again, shop is the one which can pull the customers. So if you have a good shop or if you have a good restaurant on the site, that can help you even pick up the volumes.
Sir, what are the opportunities for diversification in the oil and gas retail sector?
Retail has, so there are options in terms of diversification. Retail has a limited scope. Ultimately, retail is what you are selling from the retail side. So in terms of diversification, how can you improve your supply chain, which would basically mean where are you getting your fuels from? Where are you, in terms of terminals? So from a refinery to a terminal, and from a terminal to a retail site, can that be owned by the same company? This is a backward integration. Similarly, in terms of shop, how can you have co-branded items on the shop? For example, a coolant. If if you create your own brand in terms of coolant, that's again a backward integration. Third one could be again EV, where this is because you already have a site, and how would you compare with the person who is just offering a electric charging facility? Could be that you already have a site, your cost is anyway taken up, so you are just offering a site there, and you have a EV charging on your petrol pump.
Okay, sir. So what are the challenges and solutions related to sustainability in the oil and gas retail sector?
Sustainability in terms of there are a couple of risks which are there. One could be the safety one. We have seen in India and outside India, there are times that there are high risk area and there is a safety concern. Ultimately, you are dealing with the fuel or a hydrocarbon. So number one way to manage your sustainability is to manage your risk in terms of safety. That's one. Second is to ensure, because the entire mobility sector is under a change, although the change may take 10 years, 20 years, no one knows. Second is the different level of car. Sometimes the car comes with a higher, in terms of, it can just take a low fuel and then give you a much better average. So the consumption of oil goes down. So your sale may go down. So that can be managed through EV charging. That's again an area which is coming up. Nowadays, you would see that most of the petrol pumps would also offer a EV charging.
Okay, so, how can oil and gas retailers effectively compete with electric vehicle charging stations?
Good question. I think it has to complement each other. Again, I think from the overall landscape, if I see, EV is still very, very, very small. It has to go up, and I think it is both are hydrocarbons. Whether it is a sale of power, because EV is ultimately sale of power. So you don't have to compete with each other. It is how would you complement each other? And in India, or even in most of the countries, your charging station network is still at a very low number. So you would need a car to get charged every few kilometers, or every 100 kilometers, there should be a charging station. India is still not reached at that level. So as of now, it is not about competition. It is about complementing each other.
Okay, sir. Next question is, are there any reporting glitches earlier found in the industry and retail operations?
If you could repeat, Arushi, if you could repeat the question.
Yeah, sure. Are there any reporting glitches earlier found in the industry and retail operations?
Reporting glitches?
Yes.
I have not come across in terms of reporting glitches, but I think it's a controlled sector where there are quite a lot of regulations available. So you have to ensure that volume have to be reported. Most of the regulations are in terms of volume. That's one. Secondly, in terms of dispenser quality, and there are a lot of checks in place which are done on the dispenser. So dispenser have to be certified by the weights and measure team. Those are the second regulation. Pricing is generally an open. India follows an open pricing. So every company can decide their own pricing method. So in terms of reporting glitches, the focus has been really in terms of volume.
Okay, sir. Sir, how has the COVID-19 pandemic impacted the oil and gas retail sector in India?
COVID-19 had quite a lot of disruptions initially. When COVID hit, obviously there was no movement and there was no mobility. People were staying at home. So that reduced the volume. For the first 1 year, it was almost zero. I think that gave time to the companies to rethink on how you can run your business and how you can become profitable. So the entire Specifically in India, the concept of shop or the concept of convenience retail really came up. During those COVID days, some companies were even doing home delivery, but that is not a sustainable model. Kind of coming back after COVID, the volumes have picked up. People have realized that cost is quite an important element, because this business you have to be lean. It is very different from an upstream business where there is high cost and high margin. This is the mobility business, or the retail business, is the one which works on very thin margin and high volume. So if any disruption is there, your business will go for a toss. So it has taught companies how to manage with lean cost. That's one. And how you can generate revenues apart from fuel. So you should have some of the companies even target that shop should give them, let's say, 1/3 of the profit should come from shop, because it is a big element on the side, on the side. So
Okay,
I think
sir.
COVID-19, that's a big learning, how you can work in a low-cost environment, how you can run your shop effectively, how you can ensure that even if there is a disruption in oil and gas, or even if there is a disruption on sale of fuel, how you can still cover your entire cost, through your shops.
Surely, sir. So what are the key trends shaping the oil and gas retail landscape in India?
I think Arushi, we covered this one, but I think key trends are EV. That's one. I think I've covered the percentages also, but the two-wheeler segment is really moving fast. The three-wheeler segment in India, which is the autos, they probably cover 50% of three-wheelers today run on EV. So I think that's again coming up. It's a trend. It will pick up, and I think that's a need of the hour. The second is how you can show the customer preferences, the customer, the customer loyalty programs. How you can treat the customer and show them that it is ultimately a service industry. You are selling there. It is a marketing, part. So the element of technology, element of running a customer preferences, or how you can understand the data, because you would have millions of transactions in a month, or in a year, or in a day. How would you capture those data and come with a meaningful solution to help the consumer?
Okay, sir. Sir, theft of cash is a problem still facing many outlets in India. So how is this risk being tackled by oil companies?
There are a couple of answers to it. I think one on the site and one is away from the site. I think on the site there are specific measures taken by all companies. So every person who is dispensing the fuel has a way of storing cash, and they have a limit. Once, let's say their limit is 10,000 approximately. Once their limit is reached, they go back and deposit the cash at the shop or at the main cashier. There are cameras installed everywhere nowadays. There are cameras installed, and you have a back-to-back agreement with the bank, and bank would come and pick cash based on your cash sales. Although nowadays the cash sales have gone down significantly. At the same time, I do want to share that practices that we follow in Shell is that all employees at whatever level, you are encouraged to, go on the site and spend one day life of a retailer where you are trying and selling the fuel on the fuel pump. Believe me, it is not easy, but those retailers who are selling are able to manage it well. When I tried doing it one day, I was not able to reconcile, being a chartered accountant, I was not able to, after the entire days of sale was something, and my cash, because you would have cash, you would have credit card, you would have Paytms and others wallets, and so many of B2B. There was some shortfall which I had to pay from my pocket. It is a difficult area, but at the same time, nowadays cash collection has gone down significantly.
So, if the online payment is made compulsorily, so it may reduce the risk.
Definitely, but from an RBI point of view, my understanding is cash is a legal tender and it cannot be reduced. it cannot be, so you can't decline, accepting cash. You have to have means to accept cash. But based on the new trends, based on all the wallet options, cash transactions are anyway coming down. It's only in those specific regions or territory which are cash dominant, where there is a lot of cash collections, or the nearby businesses really work on cash. They would be the one who would come and use cash. And you can have back-to-back agreement with the banks, that banks would come and pick up cash in their locker with their safety cars, and as soon as the cash is picked up, the risk is transferred to the bank.
Okay, sir. Sir, what are the major challenges faced by oil and gas retailers in India? One, we can say the cash deposits.
Cash, I would not say the major risk, because the volume of cash in this recent years, in the last 2 years after COVID, has really gone down. So I don't think cash is becoming a challenge now. It is too small a number nowadays. The challenge is the supply chain. That is number one challenge. How would you ensure that you have the right supply at the right time? Because you would have different tanks. As I mentioned, you would have petrol, diesel, you would have differentiated fuels. So the tank size obviously is limited. And sometimes your refinery or your terminal could be far. So you have to ensure that there is sufficient supply available. Your petrol pump should not go dry. And at the same time, you can't order in bulk, where the truck is coming and standing on your head, and there is no there is no place in the tank to store the material. So supply chain becomes a big risk. Second is the area of India follows the refinery gate pass pricing, the purchase price, the price at which you buy. Your margin for, if there are companies who operate both the refinery and the retail, so their margin is basically the margin on the refinery plus the margin on retail. So they have a combined margin. But there are companies who only work on retail basis. So they would buy from a refinery. So if the price movement of oil doesn't happen and your crude goes up and down, but your selling price remains fixed, your margin can go really up and down. So that's the second challenge which the entire industry faces, and specifically those players who are only in retail and not in the refinery segment. I think the solution for it is to have back-to-back purchase agreements, is to have some swap agreements with the with the players. How you understand the industry, how you understand the crude prices, at what rate you need to buy, and at what rate you need to really your options in terms of purchase agreement has to be very clear.
Okay, sir. Sir, how can technology and innovation enhance the customer experience in oil and gas retail?
Technology, again, I think I talked upon one topic of technology was the platform or the apps where you can give discounts, or you can give preferences to the customer, and you can record customers' need, basically customers' preferences. One example I think I shared earlier was, the customer comes to the site, we know the customer would need a cup of coffee. Without even asking for the customer, you offer him a cup of coffee. That's one use of technology. Second, I think use of technology is in the oil reconciliation. Again, oil has got significant movement in terms of evaporation to expansion. Oil would expand based on temperature. How the oil flows from tankers to from the trucks to the tanks, and how would it flow from the underground tanks to the dispensers? There is a level of reconciliation. Nowadays, it can be all automated, and specifically for big companies, if you have more than 500 sites, it completely makes sense to automate, completely automate it. And sitting in your head office, you can see the movement of oil on different sites. Let's say, for example, sitting in the head office, you can see on site in Gujarat or in Ahmedabad what is happening at the different levels of fuel. How much fuel is there at the dispenser, or how much fuel is there at the pump?
Okay, sir. That's all for the questions. Thank you so much, sir, for your enlightening thoughts. And as we come to the end of this webinar, I would like to thank our speakers for their excellent thought-provoking talks. Special thanks to CA Dheeraj Sir, Chairman of CMIB, for initiating this webinar. Also, a special thanks to our attendees and all the participants for your active engagement. Your presence and contributions have enriched the discussions and made this event a collaborative success. Lastly, to technical support team, thank you for your efforts.
Hey, thank you. Thank you. Bye.
Thank you, everyone.
Thank you, sir.